Hello and welcome to BST Live, the show for algorithmic and systematic traders. Glad you could join us today, where we're going to be talking about breaking the rules. That's right, breaking the rules for higher returns. So let's get to it. Well, welcome to Better System Trader Live. Glad you could join us today. Good morning, good afternoon, good evening, wherever you are. It's a pretty miserable day here, actually. It's a bit cloudy, but we've got a great topic and a great guest to talk about today. So welcome to Scott Welsh. G'day, Scott. How are you doing today?
G'day, how are you?
Yeah, good. It's really great to have you here. I know we've got a lot of great stuff to talk about and today, and our topic is breaking the rules for higher returns. And I'm going to explain why that is the topic in a minute. But I think, first of all, now, I'm itching to ask you about the hat, and I know there's a story behind that, but we're going to keep it for later, right? So how about we start?
Oh,
No? I don't know what the story is, by the way, for everyone who's watching, so could be risky. I don't know. We'll see. But
it'd be something, yeah, you don't know.
Yeah.
What's the rating on your show, Andrew? What?
I don't think there is a rating. I think we've sworn before, so, if you want to drop some F-bombs.
I'll start swearing here up a storm.
Yeah. So how about a bit of background on yourself first, Scott? So how, some background and how you got started in trading.
Sure, and I hope that your listeners don't mind a little bit of sports references. Sports seems to bleed into everything that I talk about when I talk about trading, mostly because I was a high-performance tennis coach for a long time. I was going to be a lawyer. I got decent grades, but I was a tennis player my whole life, and then I got hurt. And it's just a sad story. Now people are going to start crying. But I was a little bit lost. And so out of college, I said, what am I going to do? And I'm going to be a tennis coach. And so that started I don't want to say what year. I'm not telling you, 1990s. And It was my life. And that's all I did. And then it was about 10 years later, all of a sudden I realized I had a couple dollars in my pocket. Well, what am I going to do with those couple dollars? I realized that if you can't be 80 on the tennis court, I mean, you can, but there's no retirement plan. There's no one waiting for you at the end. So what am I going to do? I have a little bit of money. So I'm going to try to invest it, right? So had my friend call up a financial advisor, and Andrew, I never will ever be as confused again as I was sitting at the table with a financial advisor telling me about mutual funds, or
oh goodness,
it wasn't complicated, but boy, I was dumb. Tried mutual funds and said, I don't even know what my statements are. I didn't know anything. I got my statements in the mail. I didn't even know if I'd made money. And I just decided right around 2004-ish that I need to do something about this and I need to do it myself. And so that's it. Trading then became, my whole life was I was on the tennis court or I was trading or thinking about trading. That was my life. 24 hours a day, except for the sleeping.
Yeah, it does tend to consume you a little bit, doesn't it? Trading. I'm sure we can
more than a little. Yes,
we can all understand that. So, if we look at now, can you give us a little bit of background on your the trading styles and markets that you like to trade?
Well, I started like everyone else in stocks. So that was, again, 2004. So I've been looking deeply at stocks. I started as a Warren Buffett value trader. So since 2004, deeply into stocks, how to value stocks, blah, blah, blah. And then I got into rule number one. You ever read rule number one, that old book? It used the ever complicated MACD. The MACD
right.
to time your trades. And so I got into that. And that really started me into thinking a little bit technically, but traded stocks for a bunch of years. And then I was doing pretty well. And I had a friend of mine who had a lady he was speaking to that got into this thing called Forex. And this was right around 2007-ish, whatever. Yeah, about 7, 8. And I'm like, well, I make 30% per year because that's what I average because I happen to get one big 110% winner. So in my personal account, I make 30% per year. And she goes, well, I made 1,000%. I was like, oh,
wow.
And I felt inadequate and sad and less like a human. So that immediately, I switched my whole life on that moment, on that dinner at a Columbus restaurant, and said, I need to get into Forex. So that was 2009. And I've been heavy Forex since then. but I do dabble. I create systems for futures also. And like I said, still heavily into stock. So there's a long answer to mostly Forex. It's where my automated trading systems are, but I'm still looking at all of it.
Yeah. Now, you've obviously done pretty well with Forex because last year you entered the World Cup Championship in the Forex trading section or division, I guess it's called. And you placed second, so well done. 74.5% return, not too shabby at all. Why did you actually decide to enter the competition or the championship?
This is there's a lot to this. I'll break it down if you want me to. I think
sure.
We're here to discuss. So cut me off if you don't want to hear the stories. But there's just generally this malaise over the trading profession. At least for me, it's between people telling you can make 1,000% in an hour, and then it's everybody else telling you can't do it. You'll never. 90% of traders fail. 95% of traders fail. 100% of traders fail. No, but the other part is that. But if you buy this system, it's just it's so depressing how if you don't really want to take a chance on something that seems shady, there's just so much negativity. So in my mind, there's always this doubt, like we regular people can't do this. Like Goldman Sachs can do it. We can't do it. It just is all over us all the time. We can't do it. People, because there's so little knowledge in the regular world about trading. People know stock, but they don't really know trading. They don't understand. I'm a Forex trader. Nobody knows still what that means, even though it's very much open to the retail people. So there's just this doubt all the time about we're never going to make it. And then I started researching trading contests, just because anything related to trading, I'm going to read it. I love it. And so I started reading about way back in the day, the market wizards, right? Many of them, or at least in my mind, my memory, several of them have done trading contests. Mark Minervini was one, and he's still advertising and still trading out there, still writing books.
Yep.
And he, I think, won the stock trading contest. And I just got deeply into contests in general. And I was just fascinated by it. And I said, this is not only going to be fun, but it hit a whole bunch of other special points in my brain because what have I been? A high performance tennis coach.
Yeah.
What was my life? Winning and losing, competing. I want to be better than that person. I need to get my ranking higher. I need to get on the pro tour. I need to get my ranking up for a scholarship. And so this putting in a number, well, now I'm going to compete and there's a number by my name. I just felt like home almost to do that.
Yeah.
But there's a very much of a deeper lesson I learned. And that is, we have been surrounded by everyone telling us we can't do it. And then here in these trading contests is a small group of people saying, oh, I'm going to enter the trading contest. And guess what I need to try to win? I need 100% a year. And I'm like, whoa, wait a second. These people, without batting an eye, are saying, I need 50, 70, 100%. I'm in a contest. And you go back in these contests, at least the big ones, and not the I trade a demo, right? And it's 10,000% an hour. But I'm talking about real contests with real money, with real people that have lasted for decades. What wins? 100%, 50%, 90%. That wins the contest. So there's this group of people who aren't listening to all this. We can't do it. No one can do it. And they're like, no. I'm just going to try to get 100% per year. And it just blew me away. I'm like, my entire expectation of what trading is and could be totally shifted. And I set my mind on, okay, I've been developing systems since 2004, basically, but automated systems since 2012. I have automated systems that I'm currently trading. Why am I not trying to get returns that would win a contest?
Yeah.
And so I just put my mind to it and I studied it like crazy. And it just entirely altered the way I went about thinking about my trading.
Yeah. I suppose as well that you probably see this quite a bit in the sports arena as well as in the trading arena, this limiting belief that you were just talking about there is like, when your mindset mindset shifted, it kind of opened up a whole range of possibilities. Can you talk about that a little bit more, the impact of that?
Yeah, absolutely. There's all these. I mean, I study psychology. I read psychology for fun. Why people do what they do, why they're successful. I mean, it's just fascinating to me. I mean, being a coach for so long, obviously it fit in, but I mean, that's what I do for fun. And there's always these sayings that people listen to over the years. For example, burn the ships. And I'm like, a part of me is like, yes, be committed. I mean, I've been preaching commitment for a long time to myself in trading and on the court. Like, really burn the ships? I mean, what if it doesn't go well, right? We need those ships. But a trading contest is almost that phrase in real life. Because it's like, oh, I'm not worrying about 8% per year. I'm not worrying about a big fund that I respect so much that if they make 15%, they're the best in the world, which is fine. I mean, all of that is fine. If you're trading family money, all of that is, I'm not belittling that. But what I'm saying is, when you totally switch around and say, no, I'm going for an 80% this year. I don't know if I'm going to get it, of course, but I need to figure out my money management, and I need to figure out, can my system even produce this? So step one, I went through all my systems and I'm like, I got to throw something out that doesn't produce a big win. Like, I want a chance to win. And that in itself was a huge help to my trading, saying, does this system work? No. Will this system produce something? And that is a massive, like, forget the maybes. We got to burn the ships. If we're going into this contest, it's got to produce, which led me to big profit targets, which led me, I'd been into trend following for a long time, but it made me go heavy into trend following because guess who wins these contests? At least the people that talk about it, big trend following people. Yep. So it totally revamped. I threw stuff out that I didn't need. I went way into stuff that I thought could produce. I went way into big profit targets. I got out of my beautiful scaling robot that scales out, or at least go for, I guess scaling out is not right. It goes for small profits, right? So I got rid of that. And I said, listen, I'm trying to win this thing, or at least I'm trying to, really my goal is top 5. I'm going to try to get in the top 5. I got to have something that works. And that mindset, I mean, think about that. If I have one good year of trading in this contest, that is how many years of market returns if you get 80%? Well, if the market makes 8%, it probably won't. I mean, I just got 10 years of market returns in 1 year just because I got a little bit lucky and it worked. I mean, isn't that worth it? So, I mean, it just revamped everything. Again, the money management is massively important because you can be reckless, but it absolutely made me burn the ships and stop being a worrywart about money. I mean, money management's wise, it was probably the best thing I've ever done in my life in regards to trading. It made me stop being I don't want to say a baby, because be smart, but I was so cautious. And, we might be more cautious than we need to be, all of us. Anyway, I was. So that was another big change for me.
I think that's a really important point. I think a lot of traders, they just, they don't really have a specific goal like you just mentioned, and they kind of just, maybe they just want to find a strategy that works. And then, but by looking at the end goal first and figuring out, well, is this going to get me there or not? You're really focused on what you should be doing, and skipping all the rest, which I think is an issue a lot of traders have. So I'm glad you shared that. Actually, that was a really good point. Thank you, Scott.
Well, what you said is huge. When starting from the end, that was just a massive step forward. I mean, quantum leap forward, starting with 70, 80, 100%, starting there and going backwards rather than this indicator, that indicator, totally different story. I mean, it changed literally everything about my trading, from systems to money management to mindset to everything.
Yep. Excellent. Well, let's dig into this a little bit more. So the topic of today is breaking the rules for higher returns. Now, in our first discussion, when we were kind of throwing out some ideas around what we were going to talk about today, I noticed a bit of a pattern in some of the things that you were saying, in that you like to do perhaps opposite of what is conventional trading wisdom. breaking the rules, perhaps. And I found that quite fascinating, because obviously what you're doing worked for the World Cup Championship, and you even mentioned a stat earlier about there's a huge amount of traders that fail. So the implication of that is, why do the same thing as everyone else? Because everyone's failing, right? So
exactly. Right.
so I guess logically that kind of makes sense. But I've got a few points here in my notes. I took some notes, and I actually wrote down a few quotes of what you said to me. So I think
I thought it was off the record, Andrew, for crying out loud. I'm going to start cussing. Go ahead.
It wasn't recorded, but I've got a pen and paper. So so I've got a few things I want to ask you about today. And I think you sharing your the concepts and the ideas with other traders will be really helpful. So the first one that really stood out to me is I like to see a bunch of losing in my testing. I was like, hang on a sec, because traders typically they want strategies that win all the time, right? That's like the ultimate churning out money every day, every week, every month. And so why can you explain why you like to see losing in your trading, in your results?
Well, let's go back to the beginning. It seems like I have a problem listening to the rules. And when it got into trading, you're exactly right. I've noticed a pathology in my life. For example, I did set an all-time NCAA sports record. I did play sports back in college. Right. And, I don't mean to brag, but I was the only athlete in sports history to be suspended from 2 different teams in the same season, which is pretty amazing. Yeah. I snapped at my tennis coach, and he suspended me. And then I had a little problem on the baseball field, and my coach suspended me from that too. Oh, my coach was my dad, by the way. Did I mention that in baseball? So anyway, apparently I have a problem. So that's for when I'm younger. As a coach, I managed to get suspended as a coach too. I wanted to win a tennis match, so I played a kid on crutches, and he won, by the way. We won a match with my kid was on crutches, and he beat the other team. So I'm proud and not proud of that.
Yeah.
So there are all sorts of problems with my personality. And when I decided to be a full-time tennis coach, I literally threw out every single thing I had ever heard from any coach ever. I threw everything out. And I said, I'm going to start from ground zero and create a way to teach tennis that's the best way ever taught, right? At least that's me, 23-year-old me, right?
Yep.
So, I like to tell people I learned tennis from Bruce Lee, the martial artist who died in the 70s, because I read all of it. I read every book I could find about Bruce Lee and how he created a new genre of martial arts. And I said, I want to do that in tennis. Well, that's kind of what I do in trading also, is that if there's any trading mantra that is out there, for darn sure, I'm going to do the opposite. For example, my favorite one, I'm going to get upset, but there's a quote from the godfather of index funds, John Bogle, who said, I never met anyone who beat the market, and I don't know anyone who's met anyone who's beaten the market. All right. That's another example of the negativity that we're dealing with as traders. Like, are you kidding me? Trading contests. Have you ever looked into someone who made 500% a year? That doesn't beat the market. So you're right. Everything I've done is opposite. Now, that doesn't mean I don't test, buy low, sell high, right? That doesn't mean I don't listen to the turtle strategies that are trend followers.
Yep.
I will absolutely take anything that's out there, because why not learn from something that's smart? But I don't necessarily believe it. And if the math doesn't tell me, if I test it hundreds of hours or dozens of hours or even longer, if the math says no, then I'm not doing what you tell me to do. I'm going to do what the math says. So there's a pathology here. Maybe I need therapy.
No, that sounds like a good way to approach it. So what about this? Then why do you like to see a bunch of losing in your trading? What do you mean by that?
Well, getting back around to your original question, now that we've sat me down on the couch for psychology, there is something amazing. And I read this a long time ago, and I actually, because I'm just a genius, right? I learned this years ago and never put it into my trading for about 8 years or whatever. But there's one of my favorite trading books is The Little Book That Beats the Market by Joel Greenblatt. And it's the Magic Formula System. One of the best trading books I've ever read. And he updated The Little Book That Still Beats the Market. And maybe the biggest secret to trading was in that book. And I read it and I thought, oh, that's quaint. And then I never learned it until a few years ago, is that people said, well, he has this magic formula value investing system, and you buy stocks that meet his screen and you hold them for a year and a day. And if you do, because the screen is a value screen, it always beats the market over any 3-year period. And he tested over 17 years, 18 years, whenever the book was written.
Mm.
And it beat the market every single 3-year period, sometimes handily by a huge margin.
Yeah.
And so he answered the question, well, how does the magic formula investing system beat the market? A, but we know that. B, how come everyone's not going to copy it and ruin it? Right? And you know what he said? He said, it works because it loses. And again, I didn't get it. But the reason is, he absolutely admitted that you can have losing years, even back-to-back losing years, but not 3 in a row. And the fact that his system might lose, nobody wants it. And nobody can make it through, because we're so manic and we're so anxious and we're so scared, probably from the negativity or whatever it comes from, that as soon as something loses, we bail. Now, to answer your question, when you get into trend following is not even close, okay? And I will go toe-to-toe with anyone. That's not even close. The most research of any trading system, and I mean, by far. They have trend following data, momentum data that goes back 1,200 years, if you read all the books, the boring books, right? This system, following the trend, buying highs and selling lows, goes back decades if you want, or hundreds of years. And let's see, what is the defining characteristic of trends? Well, you get big winners, but what else do you get? Losers.
Yeah.
You get losers all the time. The winning percentage of a typical trend following system is 40% if you've got a good one, and 50% if you start breaking some rules and whatever. But I spent 2,500 hours of my life developing a system that won 78% of the time. And it worked, and I made money with it, but it was subject to all sorts of problems. And it's another discussion, execution problems, spread problems,
Yeah.
But it won too much almost. The fact that it loses means it's robust. It means other people won't steal it. It means it won't ever break down. But the fact that it loses over time means it's going to work in the future. And like you said, it seems backwards, but the math actually shows it to be true. There's your long answer.
Wow. Okay, that's another good nugget you just dropped there. Thank you very much. So, excuse me. So, you use price action and indicators in some of your trading. Can you share how you can do the opposite or break the rules, do different do things differently to other traders in the way you apply price action or indicators, that kind of thing?
Yeah, absolutely. I believe in right now, at least. What do I believe? It means, where are my money? Where are my personal accounts? What are they trading right now? They're all trading some sort of breakout system. And even if it's a pure price action breakout system, break above the high or break above the high of the previous X amount of bars, I still don't follow the rule. I still break the rules and do things probably that you're not supposed to do. But specifically to your question, I love indicators. I mean, I've loved them since day one of trade. I mean, my first system was the rule number 1 MACD, right? I love them. And they get such a bad rap. I mean, traders just absolutely disparage indicators. They're the worst. Well, really smart people use really smart math and tried to give us a free tool. So I'm going to listen to them. I'm going to give them a little bit of time in my day. But like everyone else, I took indicators, and you take a stochastic or you take an RSI, and it goes overbought. It goes up. Guess what? It's overbought. It needs to go down. Well, much like our stock market, which is the most overbought it's been, since 1999, and still goes up. The U.S. stock market, that is.
Yeah.
Indicators, just because it's overbought doesn't mean it's going down. And what I've done is I'm going to use an indicator to get into a long trend. If it goes overbought, what does that mean? Maybe people are interested. Well, How do trends start? When people are interested. So I take breakouts on indicators with some of my systems. When it goes overbought, I buy instead of sell. And that's kind of rule breaking, right?
Yeah, I guess so. That goes against conventional wisdom. I think we're I mean, even in the name, it's overbought. It kind of implies that you got to get out, right? Overbought and
Why'd they
oversold.
name it that? It's just, why can't you just say it's extreme? Yeah, it's weird. Overbought, that's right. It's built-in bias to not let
Yeah.
you trade it that way. Exactly. That's a good point.
Why don't they call it something positive like a buying interest, or I don't know if there's an indicator called that. But
How about trend starter? It's in the trend starting phase.
yeah.
Oh, I'm in trend start. I'm in trend creation. Yeah, I don't know. It should
Yeah.
be. Yeah, why does it have to be negative? What a great point, Andrew.
Yeah, I just thought of that one.
I know. There's your nugget for the day.
Now, another point you told me in our initial discussion is you like to see real life. Actually, I think I've written this down in my notes wrong. I think you like to say real life trading is better than the back test. I think a lot of systematic traders have an understanding or an expectation that real life trading is never going to be as good as the back test. But you're kind of the opposite, right? You're looking for real life trading to be better.
Yeah.
How do you do that?
Right.
How do you approach that?
I am absolutely happy to stand on the shoulders of geniuses who came before me. And I'm absolutely ready to defer to people who are super smart and make a lot of money. Okay. So I don't just say no to everything, but I'm also not, like I said, not going to believe you. Right. So,
yeah.
So specifically, if what was the question again specifically?
Real life testing is better.
Oh yeah, real life testing. Yeah. I was thinking about our overbought and your genius. No, specifically in testing, one of the things they say is, we talked about go long, go short, right? So we can talk about that in a second. But I've heard over and over again, the worst drawdown is around the corner. Your worst drawdown is around the corner. Is it though? I mean, are we in America? Are we ever going to have the Great Depression again? I mean, I know the pandemic was rough, but we've never seen the Great Depression again. We've seen close, but the Great Depression was the worst drawdown in 1920s. So maybe we have seen. Anyway, testing is not as good, or testing will always be better than real life, right? When you run a test, when you run a back test, listen, chum, you never expect those results. You will never, ever be able to get that because optimization is evil and whatever. You're never going to get it. So, pat him on the head. It's nice that you created a trading system, but your testing is not real. Well, I don't believe that. Why not? That's ridiculous to me. So what I've done is I take my testing and I'm so ultra conservative with it. I mean, to me, this is common sense. And I built in so much trading costs into everything. So if it's stocks, I'm building in commission and slippage and anything else I can mathematically put in there. If it's Forex, we don't have a commission. So I'm building in trading. I'm building in the spread. I'm taking stuff out. Oh, I made $1,000 in that trade in the testing. No, that's not enough trading costs. I made 910. And I did that just by simply doing it the hard way. I watched 20, 30, 100 trades. And I said, what did my real account make? And what did my testing say? And I just kept working and working until, guess what? The testing is worse. I'm sorry, the testing is better. No, testing is worse than real life, right? Easy to get that confused. In other words, my real life is better, right? So, for example, we talked about my final standings in the contest last year was 74%, right? Well, my testing says, I looked it up, and now I'm not sure. It's 67%, I believe. So according to my testing, I should have had a 67% return last year. It might have been 65, so don't quote me on that. But I should have had a 67% win last year in my account, and I had 74. So that's just an example. But I mean, it's been that way for a long time for me. There's just no reason why testing has to be better than real life. Real life can be better.
So if you're looking at adding, a lot of transaction costs, like more than you would expect in live trading, does that kind of steer you towards trend following? I mean, can you apply that to other trading styles, mean reversion, things like that?
I mean, wow, you're good at this, Andrew. You led me right where I wanted to go. The aforementioned system, the scalping system, even though I did try to make a scale out, it's scalping officially. Seriously, and I added it up, Andrew. It's kind of stupid things I do. I worked over 2,500 hours on one. All right. It was multiple years, 5 hours a day, 6 or 7 days a week. All right. I'm not kidding. People say, oh, I worked hard. No, it was 2,500 hours, but it went for a very small target. It went for like anywhere between a 10 and 20 pip target, 10 and 20 point target. Because why, Andrew? I wanted to win. I'm a winner. I'm a coach. I'm an athlete. I want to win. So I wanted 70, 80% win rate. And the truth is, in a different Forex environment, I'd made 100% in a year, totally automated strategy. Yay, that was great. And that's when I realized, well, maybe I have something that I can trade and maybe something I can help other traders with.
Yeah.
But guess what? I started noticing the Forex environment changed, leverage went down, and spreads have gone up big time. And is that robot still profitable? Yes. But all of a sudden, I don't want to say trust because it's still based on fundamental principles. But in all seriousness, depending on the time of day, like for example, if it took a trade at 5 p.m. Eastern, tried to enter or exit at 5 p.m. Eastern, on the chart in my testing, it was a winner. And in real life, it was a loser, which is exactly opposite of what I wanted.
Yeah.
And it's like, if that happens once a quarter, who cares? But all of a sudden, in the past 2 or 3 years, I'm not blaming the broker. I'm not blaming anyone. But all of a sudden, I look at my testing, I look at my real life, and it's like a winner is a break even. And that's a problem. I mean, you have no statistical viability if you're getting like 20 and 30% differences in your trades. So that exactly led me to trend following, where if you build in trading costs, yes, do that. But what if it slips an extra 2 points or an extra 2 pips? If I'm going for a 10 pip target, that's 20% out of my pocket. If I'm going for a 200 pip target, nothing, right? So it led me right where I had been wanting to go subconsciously all along, and that is go for big profit targets. And that's where trend following came in. And that's where really I am today, is because I just want my testing and trading to be real.
Okay. Let's switch gears a little bit and talk about diversification. Now, I know I know your views on diversification. Do you want to share it with the audience and tell us why and how you approach that instead?
There was something, again, I had these principles as a coach where I didn't really understand. I understood it was true, but I didn't have the science behind it, or I didn't have a famous author backing me up. Here's how you build. I took, besides my tennis coaching, Andrew, I took over 2 college programs before I gave that up. And that was about 8 years of my life. And the first one was a down and out program that had only won 1 conference championship in any sport in history. And then we won a conference championship in that. And then I immediately left and went to a college across town to work for my uncle. Got fired from wait a second. I got suspended by my dad and my uncle. I just realized that because I got suspended by my uncle. Anyway, and I went across town, and that program had never won a conference championship ever in tennis. And we won one there too. So how did I do it? Right? I look back like, am I a genius? You know what I did? I got a star. That's how I did it. Now you think, well, it's a team, right? It's six or more players, and every match counts the same. And what does one star? I mean, why not have just 6 pretty good people, right? But it's not true. Once I got a star, I won, and I won big. And the reason is stars change everything, because they change the belief, they change your lineup. Everyone gets to play a spot lower. Everybody walks into the match thinking, well, I got a big dog up top, we're going to win. It changes your practicing. It changes everything. So I had known all along that stars matter. But in my trading, because even though I try to say like I'm an iconoclast, I really started off like, I'll follow the rules. I'll do what you tell me at first, right? And I ignored that. Well, you have to be diversified. Every major fund trades 100 different futures instruments. Diversify. And in my trading, again, it's not for everyone. Do your own testing. No guarantee of future results, but I want stars. One star, one instrument that performs well for you is all that matters. One stock, one currency pair in my case. Yes, I have portfolios that have more than one thing in it, but I am more than happy to trade just one thing and live and die. Oh, it's too concentrated. That's the argument, but I just don't believe it. It's the 80-20 principle, and all your results are going to come from 20% or less. And for me, it's like, I'm going to trade the stars. If it responds to my system, I'm trading it, period. And I'm not trading anything else.
Right. Okay. So that statement you just made there, if it responds to my system. So you're talking about being selective of the market or of the strategy, or what exactly do you mean by that?
Let's stick with trend following, right? So I'm going to buy when it goes overbought, or whatever Andrew renames it after tonight, right? So if I'm going to buy when it goes into extreme, okay? Well, why don't you test something like, Pfizer pre-pandemic, right? That just went nowhere ever. You put a trend following breakout system, indicator system on that, and you're going to make $5 in 5. You're like, it's just not going to work. Now put Tesla on it. And you're sitting in a 300% trade right now, at some point, right? Why do I have to trade Pfizer, Andrew, when I can trade Tesla or Apple or Wayfair or some of the Chinese internet companies? I mean, so I have what I like, which is breakouts. It's what I love for various reasons. I'm only going to trade the things that respond to a breakout system. And in Forex, that's really just a small handful of things that really, really, really run the way I want them
to. So I guess you're basically saying you go where the action is, but I guess trading purists would say, yeah, but you're using a selection bias there, right? So the example of Tesla and Pfizer is what those instruments have done in the past, and you can go back and test them. So how do you balance that? Do you even care?
Yep, I know, Andrew, selection bias, and you can't do that, and you can't optimize. I mean, I know. But here's the thing. Apple still works. Now, Apple is an old fuddy-duddy company, right? Well, I've been studying Apple since 2004, when things got really fun in 2004, right? And I've been studying breakout systems on Apple since 2013 and 14. And if you had just decided, I've heard of Apple in 2014 and traded a breakout system, you'd do great. In 2015, you would have done great. In 2016, you would have done great. Like, you can, and if you wanted to build a breakout system now on Apple, I bet you'd do just fine. So is it a selection bias? Yes. Tell me when Apple's going to stop trending. I mean, I know it might. I know it might stop, but it hasn't for 17 years.
Yeah.
Is there a chance it might? And so you look at Forex data, you can go back and get, real data that you can work with back to 2003. Okay. If something has trended since 2003, I know I'm optimizing, and I know it's selection bias. I know. But if it's trended since 2003, is it going to keep trending? Yes. And if it doesn't, I'll be ready. But I'm not, I get upset with, well, you have to trade 21 currency pairs and trade them all the same, but they're not the same. Stop. Anyway.
Yeah. So do you have an algorithmic process to determine which markets are moving and where to shift, or how do you look at a chart?
Yeah, I'm shaking my head. The people who are listening can see me shaking, shaking my head. No, it's everything I do is 100% automated. I don't have any discretion. That said, during the pandemic, did I turn off before a couple weekends? Sure, I did, because that's dumb. Did I need to? No. But as far as, do I put my automated strategy on something that's moving right now? No. I have chosen my 1, my 2, and my 3, and that's it. They're going to run, and they're just going to do what they do. Oh, you know what? They might lose sometimes, and they might make 10, 15% one year, but the next year they could make 150%. So I'm perfectly fine with that. Now, if a hard trending instrument like the JPY pairs in Forex, like anything that has a JPY at the end of it, is start there. Could they stop trending? Yeah, and I'll be watching. But what are the chances that they're going to stop? I mean, what geopolitical climate's going to happen where all of a sudden they don't trend anymore? When's gold going to stop trending? I mean, you could just trade gold if you believe in my star principle, whatever, right? Just trade gold, go back as far as you want and start tomorrow if you want. Run some trend following systems on gold. Silver. Holy moly, right? Why am I bothering with corn when I can trade gold and silver?
Yeah.
I don't know.
That's a good point.
Yeah.
Yep. Now, you mentioned data just a moment ago, and when you said that, I remembered a comment you made in our previous conversation where you said you don't use data from your trading platform. You get data from somewhere else and then test on that and then trade it on your platform. So obviously the data could be a little bit different. Why do you do that?
Yeah, that is welcome to Forex. And that was a problem. It's like when I got in, I mean, I started in stocks, right? The price is the price. Like you can look this up anywhere, Yahoo, I mean, anywhere, and the price is the price. Everyone knows what the price Apple was yesterday.
Yep.
But Forex is 24 hours and it's all over the world. And it's almost every day of the week. And some people are starting in GMT +2 in Australia, right? And some people are starting in America. And it's like, this is a problem. And in fact, Forex has a reputation for being shady, and so do tennis pros, by the way. So I know what it's like to try to have some scruples in a very shady profession. But anyway, Forex has a very shady reputation.
Yeah.
And deservedly so, because if you just download MT4, which is a great platform to use for Forex, if you just download it with a broker, a good broker, a reputable broker, okay, you put on your system with data that they give you, and it says, oh, you made 70% or whatever because you're aggressive. In real life, I mean, it could be like 10%. Like it is unreal. Like It made me feel like sick in my stomach, because if you don't have clean data, I made bunny ears. Your testing is not going to show up in real life. So after I said, oh, testing should show up in real life, like, guess what? It won't. So you just go to vendor. You can Google Forex data. I can shout out a company if you want. Do you want me to or not?
Yeah, why not? Yeah, sure.
Tick Data Suite is what I just Googled Tick Data Suite, and that was it. And that was recommended to me by a friend. And yeah, you have to buy money. And you pay an annual fee, and they download data. Now, if you're a futures trader, you're buying data, period. Like all the big boys buy the data, right?
Yeah.
But if you have Tradestation, you're doing stock data, you don't need to buy data, right? You're just trading the stock. But yeah, of all the things that are maybe the rule or the mantra, you better have data. And in MT4, this because you run a test, and in the corner it says 99.9% accurate or whatever it says. But it says 90, and if your data says 90%, 90, no. It's not, it's not 90. And if it says like 70 or NA, some of them say not applicable, right? Literally, you may make the opposite of what you think you made. So that is a big one, Andrew.
Yeah. Okay. We've got a question here about MT4. Actually, let me put it up on the screen since you just mentioned it. Here we go. Question from Al. Thanks for the question, Al. Is MT4 the only platform you currently use?
I started on Tradestation, and I am a Tradestation expert. I mean, I started 2007, I think, 2008, full-time on Tradestation. I mean, I know that very, very well. When Tradestation stopped doing Forex, it was right after I'd made 100% in a year. Neat, thank you. They stopped doing Forex, and I panicked like you wouldn't believe. Like my whole life was ending. And I learned Multicharts, which is a Tradestation substitute. It's almost exactly the same. And so I know Multicharts very, very well. But all of my money right now, currently, and I mean, I'm going to be trading stocks and options and other things. I'm going to start branching out a little bit. But right now, 100% of my money is on the MT4 platform trading Forex.
Yep. Okay. I just want to ask a question, something you just kind of touched on a little bit. A quote you mentioned to me, or not a quote, but something that you said to me, does the testing look like reality? Which you kind of just touched on a little bit there. Can you explain what you mean by this and how you actually apply it to your trading?
How testing looks like reality?
Yeah.
Well, in a very micro, it means, and I literally do this. I do have some fancy software, but this is not fancy. I will periodically run a trade in my tester and then just go to my account and trade. Maybe it was last week, and I'll look and say, my tester said this and my account said this. So my tester says I should have made $100 on that trade, and my account says I made 102. And I do that, and I just spot check for a whole week. And then I'll leave it alone. I'm like, okay, it looks fine. And then about maybe 3-4 months or halfway through the year, usually more often than that, maybe monthly is probably more accurate to say, I'll run a test at the end of the month and I'll say, oh, it looks like my portfolio should have been up 2%. Let's check real life. Oh, I was up 2.1, right? And I watch that very, very closely. So I do it on a very micro, and then I get macro, and then I also do it for the year. So I run it for a whole year, and like, what should I have made had I lived in testing world? And I always am making sure that my real life looks like that, only hopefully better. Does that make sense?
Yeah, absolutely. And it leads nicely into a question here we've got from Ola. Let me put it up on the screen. It's almost like you planned that answer. Can't believe it. Here we go. Ola, thanks for the question, Ola. Good to see you here again. Ola's a regular. Have any of your strategies stopped working, and how did you find out? Do you have rules for that, and have you broken them?
I break rules. That's what I do, Ola. Well, yes, I stopped, at least in the US, I stopped trading my scalping robot. And I mean, honestly, I might tear up. I mean, that is my baby. If anything is my baby, that thing is my baby. But now there are prop firms and all sorts of places you can trade outside the US, or when I move outside the US, for trading, I mean, trading outside the US is so anyway, that because the spreads are better, the execution is better outside the US for that particular strategy. So that particular strategy outside the US is not quote unquote broken, even though it's not really broken now. It just, my testing doesn't mirror my real life. The first strategy I ever made, I made money on it and bagged it because I was an idiot. Now it turns out it wasn't that great of a strategy, but I've dropped strategies that are winning because I didn't like them. And it does actually lead to a deeper answer. You have to trade something you like. You have to like being in your trades. You have to like losing and then coming back to your tennis court the next day to train for the next tournament. So if you don't like the way your system trades, you'll never make it. So that's the first thing. A broken system is one you don't like. How will I know? For me, again, smart people have great answers. For me, it would be a drawdown that's bigger than my max drawdown. It is that simple. I have a max drawdown that I'm interested in, watching very closely. That is, I'm not interested in it, but I'm watching it very closely. And if my strategy would exceed the drawdown, I would have to have a serious discussion. But Ola, all that being said, I would really love for you to be out of that mindset forever. This worry if my system is broken. And this is for our next podcast, Andrew, but there are strategies out there that don't get broken ever. And those are the ones you should seek out. And you think, what? That's not, listen, there are tennis techniques that I could teach you that will work forever, right? If you save more than you spend, it will work forever. So if you are trading a system that's simple and based on fundamentals, you never are broken, ever. And I'm trying to get that message out because that's been a life changer for me.
Are you sure? Ever?
No, I'm not sure. Of course, I can't guarantee that. But if something's lasted 1,200 years, I'm going to bet you $1 it works for another 5 minutes.
Yeah, that's a good way to put it. All right. Well, I'm conscious that we're going to run out of time soon, but I wanted to. Ola said, "Great answer, thanks." Let's put that up on the screen so you can
put that up because
we can pat ourselves on the back. Inside. Yeah, exactly. Now, I wanted to speak to you about Tesla. I mean,
oh no, yes,
you mentioned it before, but we were talking about. Well, actually, you mentioned to me that there was an article about a guy who retired at 30 something, just trading Tesla. Yeah. 39 was it? Yeah. And you did some research into the journey, and thought it was quite interesting. Can you share a little bit about that to kind of wrap? Actually, I just remembered we've got slides as well, and I've completely forgotten about them.
We don't need them because we're just rolling.
Okay, good stuff.
We don't need those stinking slides, Andrew.
Yeah. And
well, this one only because I only looked because I wanted to get the numbers right.
Okay. Yeah.
Again, this is I'm giving my answers are too long, and I realize that, but I get excited.
Okay.
This is a long. We could probably do a podcast on this, but let's be very, very clear. Buying and holding a runaway skyrocketing stock is the best trading investment ever. I said ever twice now, right? You cannot beat buying and holding Tesla, for example, or Amazon or Apple from 2004. There's no, well, I'm not entirely telling the truth, but there's almost nothing that can beat buy and hold, right? I mean, it's thousands and thousands and thousands of percent. I mean, I've committed my life to try to match buy and hold, but that's another story. So there was this guy, he's 39 now. He's sitting on millions and millions and millions. He bought at 750, okay, in 2013. And I can't even tell you how fascinated I am on what it would take, right? I don't want to hear these stories on Market Watch or what. I don't want to hear these clickbait garbage. I want, what can a regular person do to make money in his or her life? I'm tired of these cliches and stories. I want, what can a regular person do? If a regular person can't do it, then I don't want to hear it. Okay. I'm tired of the nonsense. So I broke it down. What would it take to buy Tesla at 750 and hold it to now? And it is an unbelievably hard thing to do. I know he did it, so it's remarkable. But if you have that slide up, and I'm looking at the slides for a second, I went back since March 28th, 2013, and I looked at all the drawdowns that you would have had to suffer along the way. Because why? Because you're buying and holding, which, wow, I don't like buy and hold, okay? You would have gone 40%, 33%. In February 2016, you would have seen, now think about this though, Andrew, this is, again, for the regular person, you bought at 750, right? Tesla, by the time it hit 2016, had gone through the roofs. This is life-changing, screw you money, right?
Yeah.
And 51% of it is gone. And there's not even a financial crisis. Who on this planet, besides this guy who probably wasn't watching, or maybe he was, kudos to him. You want to see, let's say your 10,000 turned into 300,000, and now you're going to see it go back to 150. Like, it is so incredible, this story and what it would take. And so I'm researching this, and I've researched Tesla inside and out, and I'm going to break it down and try to codify it and what it would take to take one of these high flying stocks and what it would be like to live with it. Because people think, oh, buy and hold. It is an incredible ordeal. And I would like to make it accessible and doable, and maybe even find a better way to do it. But look at those draws, 63.8% in February 2020. Think about that. You bought at 750. What was it, at 800 by then? Or, I mean, you 63% drawdown after all this time. I mean, holy moly. So anyway, I just thought that was remarkable. And if we can make that something that anyone could do, then it might actually be worthwhile. But I thought that was fascinating.
Yeah. Well, we've got a question in the chat here. I think you might have just touched on it then, but if long-term, let me get it up on the screen. It's from Al. If long-term hold is best, what do you recommend for people approaching retirement age that don't have forever to produce a nest egg? Do you have rogue ideas for compounding money faster?
I think about that all the time. Now, let's be very, very clear. Quote me on this. I said, or maybe I said it wrong. It produces maybe the most money, but buy and hold is not the best, at least according to me, some stranger on the internet. There are way better ways to make outrageous returns, way better. And you know what that is? Trading systems. I have a target, I have a stop, and I have rules, and I trade it. And if I make money, I bet a little more because I'm trying to win a trading contest, or I'm trying to make my retirement account grow. And if you compound with rules, keeping risk under control, can something like Tesla be matched? I'm trying to prove it can be. So absolutely, find a trading system. And when it's not always going to win, right? If it's a good one, if it's one that I particularly like, but when it wins, it's going to go. And if you don't mind compounding when it goes, I mean, one of the big reasons I do the trading contest is just to prove it could be done. Like a regular human being can do it. You take one account and make 75% in a year. I mean, that's it. I mean, that's something, right? So absolutely, don't buy and hold it. Use a trading system. The risk can be cut in half or better, and you can still get those big returns. So there's my tip.
Okay. Thanks. Scott, we got another question here from TA. Let me just put this on the screen. Have you moved away from small target systems, 5 pips, to be specific, in reference to my secret trading wish video? I hope you know what that means.
Secret trade. Oh, one of my YouTube videos. Yeah, I've done a lot of them. And if you go through, I mean, a lot of them. And if you go through, you'll see my evolution as a trader, and it's wonderful. But my secret wish, I mean, who doesn't want to win 80%? I mean, I spent over 2,500 hours of my life with that wish, my secret wish. And even more so, I would love to have a 5 pip target. In fact, I have a member of mine just emailed me last week, and they're trading outside the US, mind you. And they took one of my old systems, which are still fun outside of the US, and used a 5 pip target. No lie. And for him, I mean, he just said he was getting outrageously good results. I mean, I'm not going to say what he's made, but it was a lot of money, at least in 1 month, because it's win, 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 win. And if you compound with a 5 pip target, win, 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 win. And if the US wouldn't trade the way it trades, I would be doing trend following, but I'd also be doing that, because you go through a 30 trade win streak and you're compounding, a 5 pip target can be unreal. But in the US, I have to do it with big profit targets. But that is my secret wish still, which is why I'm moving to Melbourne, Australia tomorrow, so I can get it.
Are you? Okay. So why do you think it's different outside of the States then? Is it a broker thing or legislation, or why is it different?
I don't want to cast
is that opening a can of worms
doubts or anything mean, but I've traded some accounts outside the US because some of my members, who cares? But I've traded some accounts outside the US within the last 6 months. And I traded my scalping system, and the testing results in real life were about the same. Okay. And I've tried, I mean, since 2014, and things started degrading in 2018. I have not been able to replicate it. Like, if I go through and check it in a month or 2 months, my testing results are just way, 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 way off. So it is my secret wish, and I would still do it. And when I move out of the country, I will definitely be trading it, but I can't make it work in the US, at least not to that level. Does that answer the question?
Yeah, I guess so. Yep. Now we're almost out of time, and I still have to ask you about the hat. I'm not going to forget, because I'm dying to know the story. But before we do that, how about how can traders get in touch with you or learn more from you?
Right now, Scott Welsh Strategies is great. And it's WELSH. Andrew's going to post
I've got a slide for this.
There's a contact page. I have a massive staff of just me that answers the email that comes from that site. I'm just not ready to turn email over to anyone but me. So unfortunately, if you want a friendly service staff, you're not going to get them. You're going to get me. So if you go to Scott Welsh Strategies, go to contact and fill out the form. I know people think you fill out those forms and they go nowhere, but they actually go right to me. So if they want to contact me and email me, I will email you back. Isn't that crazy? And I have a YouTube channel, which you can Google with Scott Welsh Strategies. And I'm also on Twitter. A lot of Roger Federer talk, though, on my Twitter. So you got to be ready to talk about the greatest athlete of all time if you're going to get on my Twitter. It's swelsh66.
Awesome. Now, onto the hat. Let's finish up with the hat. I'm dying to find out what is the story behind this hat. So,
I'm tired of people telling us what we can't do, right? And I'm obsessed about it. Regular people don't know how to make money. I didn't know how to make money, and I'm tired of it. And I have an axe to grind. I want regular people to be able to make money. Well, this hat, one of my students, she was about 5 feet tall, poor thing. The tiniest weighed, I don't know if she weighed 100 pounds, maybe after a meal. But she was earnest and smart and fast. And she had a dream. I had my first tennis lesson. She said, I want to go pro. She's 5 feet tall, and all of her strokes were awful. And guess what? She did a few things right. She hit the ball in, she ran around. And by the time she was a senior, she was one of the top 10 best players in the country, in the United States. And so good schools were interested in her. But I lived in Columbus, Ohio, and there's a state university, I'm not going to name it, but it's in Ohio State University. And they were recruiting her because why not have, she was 3-time state champion, and, she hadn't lost a high school match in 2 years, and she's top 10 in the country. So why not recruit her? And they did. And on her recruiting visit, they said, well, who else are you looking at? And they said, I'm looking at Northwestern. Northwestern had won the Big Ten championship for almost a decade straight. They were number one team in the nation. And so the team recruiting her from Ohio said, nope, you're never going to play there. You're too little. You don't hit hard enough. You hit too soft. Come play for us and you'll make it. If you go to Northwestern, you'll never play a match. And guess what, Andrew? She went to Northwestern and their team ended up number one in the country. She ended up playing number one singles for Northwestern. She made the NCAA tournament and made the Pro Tour. So screw people who tell you can't do it. If you use fundamentals, you can do it. I wear this in honor of her, but in honor of someone who wants to do something great.
Awesome. That is such a great way to end. Screw the people who tell you you can't do it. I love that.
I want to hear it.
All right. Well, thanks again, Scott. It's been awesome chatting with you today, and we got a lot of great comments and questions in the chat. So, I look forward to going back over this one and taking some notes and sharing. You got some good quotes too. You're a bit of a quote machine, I think. So we'll see what we can pull out of that. But yeah, thanks again, Scott. I really do appreciate it. And please, if you enjoyed what Scott shared today, please share it with all your trading buddies. Hit a like and subscribe on the channel. And here we go. We've got some thanks coming in. So Al said, thanks, Scott. And thanks again. And I wish you all the best, Scott. Cheers.
See ya.
Thanks. Cheers. Bye.